Hey guys, Stockaholics. Thank you guys for being here today. Today I'm going to be talking about A2 Milk. It's a New Zealand milk company and why I'm thinking about investing in this company. This was a surprisingly complicated thesis for a milk company, but I'm going to be sharing everything that I've discovered so far and why I haven't done anything yet, but I'm strongly considering investing in this company. You also see here that I've mentioned this is kind of a weird geopolitical COVID play. I'm going to talk about that a little bit in this video. I think that this company is suffering from kind of a negative hysteria still surrounding COVID, whereas in a lot of the world you've still seen kind of a reversal on that thing. This stock has kind of done a little bit different things, and I'll share this in this video. I'd also like to say that I think that the most likely people to come and watch this video are going to be New Zealanders. And I am not a New Zealander. I'm an American. And you can see my jab here on how come Kiwis are so bad at analyzing their own stocks. I think that a lot of people are really bad at analyzing stocks. And you can see in this video, I'm going to be talking about all kinds of aspects to the business that I was dissatisfied with at looking at other YouTubers' videos. So that's kind of why I've decided to, another reason on why I've decided to make this video today. And I think it's going to be a long one. Now, those of you guys that may have been here for a little while, appreciate you, by the way, may know that I'm kind of a contrarian investor. When I see a lot of people going one way, it makes me a little bit interested in kind of the opposite perspective. And in this case, the stock that we're looking at, I think, is been unduly punished. For the vast majority of this stock's history, it was kind of a darling. It's considered a blue chip stock, and some of that has been shifting in the recent weeks and months. And for me, as the black sheep and the contrarian investor here, I find what I'm observing to be quite exciting. I find the fear I observe in investors and the analysts who have been looking at this stock as a contrarian and as an outsider from New Zealand. I find this to be very exciting. Now, like I mentioned before, I kind of see this as a COVID play, which is very strange to be thinking about in March of 2021, where, you know, what I mean by that is if you think about a year ago, at least in the American stock market, I don't know about New Zealander stocks, what happened. I'm sure it was a very similar situation though. A lot of them sold off dramatically, and a lot of that was due to fear and uncertainty surrounding COVID. In this stock, there's a very strange thing that happened where at first the stock benefited from COVID, and now I think is done a 180, and now it's being punished unfairly because of the environment that the pandemic has caused. So I'll share some of that in this video. All right, so this is gonna be one of the longer videos, which is kind of crazy to think about because it's a freaking milk company of all things, but it's surprisingly complicated. Now, I'd also like to say before I even get into this, the way I found this company was by reading through the OTC market directory. I first found this company in, I believe, early January this year. I kind of wrote it down. I wasn't too interested in it before because I thought it was kind of overvalued. I thought that some of the price in this stock was kind of up there. But you can see things change. Things change over time. My opinion on this has changed and that it's actually, I think, undervalued at where it is now. All right. And I'm going to kind of share with you a lot of things to kind of show you guys why I think that. So first of all, I'm going to look at the history and structure of the company in this video. I'm going to talk about WTF, what the fuck is A2 protein in milk anyway? What is that? I'm going to talk about the Chinese distrust in their own products, in their own, especially consumer products. We'll talk about something called the Daigou channel. I'm not sure if I said that correctly, but it's a Chinese phenomenon, and we'll talk about that as well. We're talking about Australian lockdowns, which affects this company, and we're going to talk about a new CEO who I believe has a really strong background and can do tremendous good for this company. And last but not least, We're talking about New Zealand demographics, something I think about whenever I'm investing in a foreign company. Now I want to start by showing you guys this. This is the debt to equity history in this company. You will rarely see something like this. You might see something like this in kind of a Silicon Valley tech company where they've just been a purely cash flow driven model. Well, this is a milk company, and as you can see, this company has been purely cash flow driven and seen tremendous growth over the last 5 years. Now, this goes back even further than this. This is perhaps the last 10 years. I'll show you guys a little bit more on the next slide. But even in this downturn, where there's been immense pessimism in this stock, this company still has absolutely no debt. They have a lot of cash on their balance sheet. Cash which, even probably the most pessimistic of scenarios, will last this company a few years at least. All right, so this is kind of the history of the stock price. We'll kind of go over this. If you invested in this company in 2010 and you had sold in 2020, I'm sure very few people have done that, but I think you would be up 16,000%. Again, to me, this is mind-boggling to think about for a milk company. Yeah? So this company has just seen massive growth. Now you can see since kind of late September, I think, last year, somewhere around there, this company has been just at least the share price has just been tanking beyond belief. There's been a few reasons for this. I'll kind of share some of those. So the last 9 months have basically been, I think, the first real setback that this company has ever seen. And I think a lot of the people that are buying this and holding this company, they don't know how to deal with setbacks in companies. So instead of seeing them as buying opportunities, they're instead seeing, well, we got to get out of here. What the heck's going on in this company? I think some of that could be due to the company itself. I think that they've kind of probably had given higher expectations than they probably should have. And what we've seen over these several months is that they've downgraded forward guidance 3 times. And I think that this has continually spooked investors. Yeah. What I've seen, I watched, like I said, I watched a bunch of New Zealand YouTubers videos. One of them was an older gentleman. I won't say who, but he perceived this company to be a blue chip stock, and he no longer perceives it to be a blue chip stock because of some of this. And it's like, to me, it's like, are you even analyzing the company as a whole? Why do you think that there's these problems here? There's no such thing as no setbacks in a company. And to me, these setbacks are kind of exciting because I see all these people flocking away and what could potentially be a much more valuable company than it is now if this growth trajectory continues, especially if it turns around from this immense pessimism that we're seeing. All right, so what I'm about to show you guys is a clip from Visual Politic. It is a non-investment channel, and you can see that several months ago, people were very excited about this company. In fact, they were very excited for a long time. So I'm going to show you guys this clip. And I think the reason I'm showing it to you kind of highlights the business model that I think is very good for this company.
A business success.
16,000% up. Are we dealing with a bubble? Well, more like a spectacular growth story. In the last 5 years alone, the company has managed to multiply its sales by almost 12 times, and in 2020 they expect a further increase of more than 30%. And it's not just about income. An increased operating profit hasn't been slow in happening either. The projections for the company's interest and pre-tax profits expected by the end of 2020 are greater than the company's entire market value was in 2015. We are talking about a company that has so far been operating in New Zealand, Australia, and China, but which has just taken on the giant US market. But at this point, the burning question is, how has this small company achieved such success? What makes this business tick? Well, you see, the most surprising thing about it is that A2 Milk is not really a food producer. That is, it is a very unusual dairy company because all of its products are manufactured by third-party suppliers. Suppliers with which the company maintains strong ties, as is the case with Synlait Milk, a New Zealand dairy company that lists A2 Milk is its second largest shareholder, controlling 20% of the shares. But we're still talking about third-party companies. As we told you before, A2 Milk is basically a distribution and marketing business. The goal of its managers is to feed demand, take care of the distribution chain, and strengthen its brand image. And this has really important advantages. For example, they don't need to invest in capital. It may be surprising, but over the past 5 years, A2 Milk has managed to increase its annual sales by more than 1.5 billion New Zealand dollars by investing in fixed capital totaling just $9 million. Yes, that's correct. Just 9 million New Zealand dollars, about US $6 million in the current exchange rates. In this way, the company not only does not need large lines of credit or to assume large debt commitments, but also the bulk of the profits it generates are in cash. What's more, thanks to the fact that it does not have to make huge investments in fixed capital and face all the associated costs, the company achieves an operating margin of more than 30%. That is, at the same level as the big technology companies in the United States.
All right, so this was taken from the company's most recent investor relations or investment presentation. So you can see here, over the past few years, we've seen that consistent growth. Some of the things that we've seen people very excited to talk about, as well as we saw that in the debt to equity ratio. Now you can see here that there's three main markets that this company is receiving revenue from. Now there's a fourth, that's the United States now, but that's it's kind of a small sample compared to the rest of these markets. And this is from ANZ, which is Australia, New Zealand. CBEC, which is cross-border e-commerce. I think that mostly has to do with the Chinese, and this China label. I think that the most important thing in all of this is actually this beige number here. And this is something that I think that a lot of people are overlooking. And I'm going to hopefully be able to share some more with that. But anyway, we saw a bump in sales in early COVID days when people were freaking out. They were panicking. They were going to the grocery stores. They were buying all kinds of products. A lot of those were milk products, as well as infant formula, which is where this company derives a large amount of this revenue from. Now, recently, you can see that we're seeing a very sharp decline in Australian sales, Australia, New Zealand, as well as the CBEC, cross-border e-commerce kind of channel. I think that the main reason for this is something that the company says is called the Daigou channel. And I'm going to explain what that is in a little bit. But I want to really emphasize that I think that this doesn't really matter as much as this growth does. All right. To me, the loss in these categories tells less of a story than the growth in this one. And the main reason for this is because a lot of these sales, although they look like they're coming from Australia, New Zealand, they're not. They're actually coming from Chinese. And so when we're seeing this continued growth in China, I think that is much more important than the loss in these two ones, even though that loss is very, very, very significant. All right, so this is taken from the last investors presentation for the company. And this is the big one. This is what's really been dragging down the revenues, earnings, as well as, I believe, the share price. This infant nutrition formula, their sales are down 40%. This has to do mainly because of COVID-19 disruption. Australia has been locking down their economy, and that has really, 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 really damaged this reseller channel. But I'm going to talk a little bit more about that later. What I think a lot of analysts don't really get is this kind of messaging from the company. They say things like they're going to reactivate channels and that they expect improvement in this channel. I don't really see how that's possible with the Australian economy doing what it's doing. It seems like a lot of this is out of control for the company. It's not really in their purview. It's not something that they can control. I think that is kind of unnecessary, signaling some unnecessary things to investors. But perhaps that is, again, another kind of advantage if you really kind of understand what's going on. Now, there is some things that I don't really understand, and it's this. And this is probably something I'm going to research a little bit more. In Hong Kong, one of their brands, they kind of stopped selling it. And it's down 35%. So I'm not really sure why. So there could be something else here that I would like to research a little bit more. Now, in addition, when I was listening to the last conference call, one of the things I noticed is that because you noticed that the second half of 20, people were buying a lot of these products. What this company did in response is they kind of they anticipated that this demand would continue, and for these kinds of products, and they kind of they built an excess supply to these channels, and simultaneously, now that we're seeing a decreased demand for these products, and the company has this excess supply of all of these things. So that's not good. They've made a decision that is obviously not the most optimal, but it's probably one that you just who really could have anticipated, right? Okay, so I wanted to take a step back. I wanted to share with you guys what the heck A2 milk is anyway, because this product, they try to differentiate themselves from their competitors, and I think it's an important distinction that is worth looking into. Now, this is according to their promotional material, somewhere I found on their website, I believe. This is the A2 protein difference. Conventional cow's milk contains two main types of beta-casein protein. That would be this cow over here, A2 and A1 protein. A2 company's milk is different from conventional cow's milk because it comes from cows selected to naturally produce only A2 protein. So there's some genetic differentiation that happens between different kinds of cattle, and that causes them to produce different kinds of milk with different kinds of protein in them. All right, our milk, they claim, is comparable to conventional cow's milk in other respects. So I think what they're trying to say here is that it tastes the same, but it has some additional benefits, they believe. Our branded milk is naturally occurring and is not a product of genetic engineering. Many consumers and healthcare professionals report that some people who experience digestive issues drinking conventional milk may experience benefits when they switch to A2 milk. Now, I don't know much about the science behind all of this. I think that this company has funded a lot of research to kind of emphasize their point here. I don't know about the efficacy in any of that science, but what I have done is I've read a lot of reviews on people's who've drank this milk, what their claims are. And a lot of those people, not all, I would like to say, and I've looked at different review sites. I've looked on Google, I've looked on eBay, looked on Amazon, and looked through a bunch of the reviews on what people were saying. The products for this company have very, very, very high reviews. There's some people who I've noticed that it doesn't help their digestive issues, but I've read that for others, when they drink this this company's milk, they don't have a lot of the digestive issues that would normally be associated with lactose intolerance. So they're able to drink A2 milk, but they can't drink other normal kinds of milk. Now, what's a little bit important, I think, for this company is that this is actually probably the company that discovered these different kinds of protein. So they kind of have a little, I guess, brand association with A2 itself, the discovery. So this company's founders are credited with discovering and promoting A2 type of milk. But that doesn't mean I think that this company has a moat for producing A2 milk. I think that other companies are producing A2 milk. They can do the same things that A2 milk does in producing this milk. So I don't think that there's necessarily a moat with that, but I think that there is a brand association because this company discovered this type of milk.
We're a company that's created a product that just fundamentally makes people feel better, especially if you have some level of lactose intolerance.
And what percentage of the overall milk market do you guys fill, and what's the price difference to regular milk?
So we're very predominant in the natural channel and in premium retailers, and we do sit at a price premium relative to normal milks. We're sitting in the specialty cabinet, but the product is actually starting to really take care of itself now. I mean, the consumer demand for the product is impressive. We're getting pulled by consumers across the country. Trade is really picking up the story. We announced entry into Walmart and Costco a few weeks ago, so it's a great consumer story.
And I mean, the number of people today, I reckon, since 10 years ago that say, oh, I don't eat dairy anymore. Is this an alternative to them? That they can't, or if they have a full dairy intolerance, this is still not?
Well, what we're finding is that most people who think they have an intolerance for dairy actually have an intolerance for the A1 protein. So if they drink A2 milk, they're recognizing that actually the dairy cabinet's not off limits.
Mm-hmm. I remember we had, it wasn't you, Jane, we had someone else from this company on before.
Yeah, probably Blake Waltrip, who's our CEO for the US.
Right, and we talked about actually how it works. There's cows somewhere that they're A1 versus A2, right? Or I mean, you don't actually switch the protein around. There's some cow.
They're genetically predisposed.
Where are they?
Well, India, for example,
has the A.
In fact, the discovery of A1 versus A2 proteins came from dairy scientists understanding that there were dynamics that were different around the world in terms of dairy intolerance. Right. And in India, they don't see dairy intolerance. They don't see a lot of other diseases that are connected, like diabetes and heart disease.
So what did you do, bring some cows over, or you just have...
No, what it turns out to be is that it was a gene mutation a long time ago in the European dairy herds. And so if you look at herds across the country, you see roughly 30% of cattle, dairy cows, are A2 only.
So you just use those?
So we've got genetic testing that helps us understand which of the cows that are A2 only, and we segregate the herds. We've got a special way of managing herds with farmers that keep them segregated, so we've got integrity in the supply chain.
How tough is the market, though? I mean, so many people now are used to nut milks, and they've really dominated this milk category. I mean, as people are moving away from regular cow milk, they move to nut milk. So you have a group of people who are already used to that substitute.
Well, what we're seeing is people, and you can see the testimonials on social media, so we let consumers speak for themselves, but we're seeing people come back into the dairy cabinet because they are recognizing that they can actually drink milk. So instead of having to drink nut alternatives and have cereal with a nut milk, which is a different experience, they're coming back to drinking fresh milk, which is fantastic because it's giving growth back to dairy farmers. Seeing fresh milk sales finally start to rise in a sector that's been on the decline.
All right, so I also want to talk a little bit about China because it's very important, I think, to understand the success of the A2 milk company if we don't understand China. And China has been a key market in the explosive growth we've seen. One of the things I don't think a lot of people know, and why I really like A2 milk as opposed to kind of traditional milk, at least in their respective market, and is this. And I've studied genetics, so I know a little bit more about this, and I think perhaps I can share this with you guys a little bit. Although there are no official figures, studies have indicated that lactose intolerance affects around 30% of Chinese children, and a study of Chinese adults showed that 92.3% suffered from some level of lactose malabsorption. Despite this, there is a huge push to encourage Chinese people to drink more milk. This is from foodsmatter.com. All right, so this is an excerpt from an article by Richard Hudson. You can find on Seeking Alpha. The article is called A2 is an exceptional company, but the earning guidance is Spilt milk. You can read the whole article on Seeking Alpha. I would recommend it. It has a lot of additional information on the company. I'll put the link for that in the description below. Now, this is an excerpt called The China Growth Story from that article. In order to understand what makes A2 an exciting investment, it's important to go into a bit of detail about the Chinese market itself that has been a key driver of this company's growth. China is estimated to overtake the United States as the world's biggest dairy market by 2022, growing fourfold since 2012 and making up around 25% of world demand. This is being driven by the rise of the Chinese middle class, which has increased from 3% of the population to over 50% in a short time frame there. In addition to rising wealth, attitudes in milk in China, where it is seen as a health product, are key in driving that demand. And on the last slide, I also mentioned that thing that differentiates A2 from normal milk, and that is that lactose intolerance that tends to be prevalent in Chinese ethnic peoples. Milk consumption in China also serves political means symbolizing an affluent society able to feed its population. The fact that people can afford Western foods is a symbol of Chinese increased affluence and power. It is also a means of battling inequalities and health issues such as malnutrition, which have decreased significantly through government efforts and rising wealth. To meet increased demand, China has scaled domestic production through subsidiaries and regulation. However, this hasn't been sufficient, with demand consistently outstripping domestic supply. China is now the world's largest importer of milk products and will continue to depend on foreign suppliers for the foreseeable future. This is because the cost of production for Chinese dairy farmers is so much higher than the main exporting nations, with a kilo of Chinese milk solids costing 43% more than that from its largest import partner, New Zealand. All right, so it's also important to consider Chinese products themselves. Now, there is a severe distrust among the Chinese in their own consumer products. This is an old article, but I think it illustrates a point. And this is also important to understanding the Daigou market that has emerged in Australia, which we're going to talk about in a little bit. This article is by the BBC. China dairy products found tainted with melamine. Again, this is a little bit old of an article, but you're going to see in a second why this can have devastating long-term impacts in the trust of a local supply chain or food chain or whatever. So Chinese food safety officials have seized 64 tons of raw dairy materials contaminated with the toxic industrial chemical melamine. Test samples showed the milk powder carried up to 500 times the maximum allowed level of the chemical. The use of melamine in milk in 2008 killed 6 babies, and it made 300,000 babies ill. Imagine that for a second. This isn't just, we're not just talking about adults here. We're talking about babies, and you can think about how people feel about that kind of a thing, right? The latest batch of contaminated powder was first found in Gansu province and traced back to the Dongguan dairy factory in Min country in neighboring Qinghai. If I'm saying these words wrong, I'm sure I am. I apologize. Another 12 tons of the finished milk powder products, also found to be tainted, were seized. The owner and a production manager at the factory has been detained. Around 38 tons of the raw material were bought from Hebei province, the source of the 2008 scandal. Police said this means traders may have bought tainted milk that should have been destroyed in 2008 with the intention of processing it and reselling it. Wang Zhongzi, deputy chief of Gansu's Quality Control Bureau, was quoted as saying. So the way I interpret this is what these Chinese people were doing. They were almost kind of like if you've ever seen a movie on like cocaine or whatever, and I know milk products aren't exactly cocaine, but you've ever seen where they have a product and they want to sell more of it. They lace it with kind of like some other shitty substance. This is what these people were doing with these milk products. So that instead of just selling the milk product to the consumer, they were lacing this stuff with cheap, shitty substitutes that were poisoning people. So melamine is used to make plastics, fertilizers, and concrete. When added to food products, it indicates a higher apparent protein content, but can cause kidney stones and kidney failures. So what these people were doing, they were lacing it with this stuff to try and, because it's cheaper, and because it appears as though it is a higher quality if you test it for protein. In 2008, melamine was found in the products of 22 Chinese dairy companies, 1 out of every 5 suppliers in China. You think about what kind of long-term impacts. Again, this is from 2010. If you see widespread poisoning of a consumer product for babies, what kind of psychological impact would that have? Probably for generations, right? The scandal caused outrage among consumers and fraught parents and led to an international outcry about the standards of food safety in China. Now, knowing this, let's say that you're a Chinese parent in China and you need some baby formula. What might you do? Where might you try to purchase? And I think this baby formula, and I think this kind of illustrates the explosive growth we've seen in these in A2 and some other Australian and New Zealand companies. or at least dairy companies. All right. Now, because of the increased demand that we've seen coming from China, and because of the distrust in the local supply chain in China, this has led to increased demand in acquiring these kinds of products from other sources. One of the things that's led to is this Daigou phenomenon that we've seen in recent years. Now, because of the distrust in the Chinese supply chain, an entire industry of these kinds of resellers were born. What these people do, they are Chinese people that are either visiting temporarily, or they may be immigrants, or they may be students in Australia or New Zealand. What they do is they purchase these kinds of supplies, especially baby milk formula has been one of the main things being these people purchase. And what they do is they send these products back to China. Now it's been a crazy huge industry that has grown. These people kind of have some kind of a trust, they have some kind of connection with clients. They purchase these things from retail, or they purchase them from the what do you call them, the different distribution companies that have these kinds of milk and infant formula products. And then what they do is they package them. They send money through different apps on their phones, and those products are sent directly to customers in China. And this way, it makes these purchasers much more confident in the safety of that product. These people are hugely important. They cannot underestimate how important these have been to the sales that we've seen in Australia and New Zealand. And it has been big business, and it's been driving the sales growth that we've seen in these companies. Okay, so this has been the main problem with this company. And if we look back to some of those slides before, that you can see that there are several sales channels for this company, and one of those has been Australia. And although it may seem like those sales are coming from Australia, it's not. It's coming through this Daigou channel. Now, the problem is Australia's COVID policies, and they've been barbaric, and they're causing havoc on international trade, as well as the company that we're talking about today. Australia's international borders will remain closed until 17th of June. We're not talking about 17th of June 2020. We're talking about 17th of June 2021. And people make fun of Americans for being stupid, but I digress. Australia's international borders will remain closed for at least another 3 months, in a blow to almost 40,000 citizens still stranded overseas more than a year after the coronavirus pandemic began. On Tuesday evening, Health Minister Greg Hunt announced the extensions of the Human Biosecurity Emergency Period, which bars travelers from entering Australia and stops citizens from leaving without an exemption. The emergency period was previously scheduled to end on 17th of March, exactly 12 months after it was first introduced, but has now been extended to this June. This means Australia's borders will have been closed for at least 15 months when it expires. Now, what we saw last year is that we saw that there was still a large Chinese presence in Australia, in terms of particularly foreign exchange students going to universities in Australia. A lot of these people were involved in the Daigou industry, and they were selling and distributing those products back to China. Now that these borders have still remained closed, a lot of those Chinese have gone back to China, and there's been no reintroduction of Daigou, the people who are going to send those products back to China. So you're seeing these contractions in this company's margins in Australia and New Zealand. A lot of that is coming because this Daigou channel is dwindling. And this is kind of what makes me so confused by the company's interest in reinvigorating the Daigou channel, because they can't control what's happening in the Daigou channel. It's because the Australian borders have been closed for so long. There's no more Chinese to send back these products. All right, I know there's been a lot of articles, but I want to talk about the CEO, and I think the new CEO, and I think this kind of emphasizes why I think the new CEO is great for the particular position that the company A2 Milk is currently in. The new CEO has revived struggling businesses before. This is an article by Carrie LaFrance, and this is from the Financial Review. David Bortolussi, from beer to bonds to baby formula, and baby formula again is A2 milk. The maker of clothing brands such as Bonds and Burley has been attacked for abandoning Australian manufacturing, slashing 1,800 jobs when it shifted production offshore in early 2009. The company's near-death experience peaked with $1.4 billion in write-offs. This is what I like to see. I like to see CEOs that are willing to make hard decisions, and they don't necessarily care about public opinion, but they care about the profitability of a company, because the jobs in that company don't matter if the business is out of business, right? And this is what you want to see in a CEO who is taking over what is in a company that is going through a tough spurt over the past 9 months, yeah? Bortolussi stuck around, despite missing out on the top job to John Players in 2012, after former boss Sue Morfett exited. By 2014, Bortolussi snared the CEO gig and oversaw the sale of iconic names such as workwear brands King Gee and Hard Yaka and Volley shoes. Bortolussi pinned Pacific's recovery on the 100-plus-year-old brand Bonds and Ceridian sheets, and it worked. He increased prices to protect margins and profits. From lumbering under $700 million of debt by 2016, Pacific Brands was in its best shape for a decade. So this guy took a struggling company, turned it around. He was instrumental in the $1.1 billion sale of Pacific Brands to U.S. giant Hanes that year. While Champion is the top performing brand globally for Hanes, its Australian unit is one of the best performing out of the global businesses. All right, so the last thing I kind of want to share with you guys is New Zealand demographics. I've made a video on this before. I'd recommend you check it out if you have no idea what I'm talking about. I think about this a lot when I invest in foreign countries. If I see a negative population dynamic, I don't want to work against inflows and outflows in the overall market. So that's something I always consider. New Zealand demographics, what you can see, they're kind of neutral over the long term. So I don't really see this as either a benefit, like I do see in Russia, for example, when I invested recently in Lukoil and Gazprom. But I don't see that here. I don't really see an increase or a large increase in investment age adults that could invest in this company. And remember, we're thinking about New Zealanders and their home country bias, and they tend to invest in their own countries, just like everyone around the world tends to invest in their own countries. So the most important population dynamic when we're thinking about investing in a foreign country is that population's investment base. Now, this is kind of flat, what we're looking at here. New Zealand's demographics are pretty neutral over the long term. So I don't expect large inflows of money into their stock market. I don't necessarily expect large outflows in their stock market. What I think is going to be the main driver is company profitability. And for me, I think that this company has more upside than I think it has downside. And maybe I'll kind of share my final thoughts on this company. Okay, so I'd like to kind of share my closing thoughts, kind of wrap up everything into a kind of coherent statement here at the end. So what we saw here, I shared this a little bit earlier, this is the drop in earnings we've seen in this company. So this drop in earnings, I believe, has scared a tremendous amount of investors. This is the first time anybody in this company's even seen something that resembles any kind of a diminishment in earnings. Yeah. I think that this can be explained mostly because of Australia's border policies, and I believe this is the main cause of this destruction. I think that A2, like a lot of the company's promotional material claims, I believe that they do have premium brand pricing power, and I think that they have a unique advantage with their dairy type differentiation, especially among the Chinese. Now, you mentioned, I shared before, I've studied some genetics, and I know that Chinese people, they tend to have a higher than average dairy intolerance. So if we have a company that promotes itself by being anti-dairy intolerance, and we see a culture that is highly embracing milk, I think that this company has an advantage in penetrating that market. Yeah. And I think that this beige category that we've seen before, it kind of proves what I'm talking about. This is the Chinese label growth, in their dairy infant formula. And we've seen consistent growth in that market, despite what we're seeing in the destruction of this Daigou channel. Now, although the Daigou channel has dissipated, I don't really care. I don't much care about this channel for the long-term trajectory of the company. To me, the Daigou thing, it's kind of this inefficient sort of channel where it shouldn't matter. At some point, and the poisoning event that took place in China, I'm not saying it's not significant, but obviously it is, if something like this can even emerge. But I'm saying, how long can that kind of a business model, which is probably highly inefficient, continue to exist? To me, I don't see the Daigou channel being a long-term benefit, but rather it's kind of more of an icing on the cake for an investment thesis. To me, the things that matter is at least in what we're talking about the growth in China, is this direct to sales in the Chinese market growth. A2 has seen growth and penetration also, and this is something else a lot of people don't think about, they don't really seem to care, in a very tough American dairy market. And this is more proof of concept to me. Also, we've seen a new CEO, and he's been in some tough spots before, and I expect this experience to be invaluable in the reinvigoration of his new company. I don't see any headwinds with NZ population in terms of demographics. That's the slide I showed you last. And finally, there's some next steps for me. I would like to research their competition a little bit more. Although I think this company may have some very minor moat in terms of their brand, I don't necessarily think that may be true in terms of the milk itself, because I think it's easy to replicate. So I'd like to see what some of their competition is doing, and I want to see if they've been impacted in as much the same ways as A2. Now, I've seen a little bit of it, but I want to do some more of that research. And so far, I will share that what I've seen is that this trend that we're seeing here is been impacting most of their competitors outside of China. If I invest, I'd also like to suggest that because this stock is in a downtrend, I will not be lump sum investing, but rather I will be investing over a period of time. I'll be in kind of feeling my way into that over a 3 or 6 month period. If you made it this far, I appreciate you for hanging out. If you'd like to know any more about this company, or if you'd like to share anything, I would be greatly appreciative of that. Let me know in the comments below. And if you found this useful, I'd appreciate it by giving me a like, or if you'd like to see more content like this, consider subscribing.